Hello folks, my name is Eric Wilkinson. Yeah, you might recognize me as the Wolfman, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data to start off the day. We got out of Great Britain, average earnings index came in at 3.4%, expected to be 3.1%, and revised last month's number up slightly. The unemployment rate came in at 3.8%, also out of Great Britain, in line with expectations. And then we got German ZEW economic sentiment coming in at negative 24.5, expected to be a negative 22.1, so a little bit worse than expectations there. And then the ZEU economic sentiment out of the greater European region coming in at negative 20.3, expected to be negative 20.9, so slightly better than expected there, so that's a good thing. We also had Baumann speaking across the pond, or early this morning. And then back over here in the United States, we had core retail sales coming in at 0.4%, higher than the expected 0.1%. And then retail sales coming in at 0.4%, expected to be 0.1%. So both those numbers coming in at the same and expected at around the same. Remember, core retail sales strips out some of the more volatile aspects of that, like automotives and stuff. Both numbers were revised last month's numbers for both of those, the core and the retail sales, coming in with a revision of a tenth of a percent lower. So it's not really enough to take away from that headline number, which was a nice beat of 0.2 of a percent with that revision. And then we got capacity utilization coming in slightly lower than expected at 77.9, expected to be 78.2. And then industrial production coming in expected to be 0.1%. Also, we got business inventories coming off at 0.3%, expected to be 0.4%. So we want to see those inventories moving. We were seeing a bit of a build. Remember, earlier on I said it's a bit odd that we're seeing some of these inventories build when there's nothing going on in the summertime. We want to see some of those inventories depleted so that they can ramp up for the next holiday season. Now they're starting to see some of those inventories move, which is a good thing. Also, the NAHB, which is the National Association of Home Builders, housing market index coming in at 65, expected to be 64, so that's still a good thing. I've been a little bit worried about the housing market with rising interest rates, people getting used to those lower interest rates. Then when they see the interest rates rise, they realize they can't buy as big of a house or as much of a house as they were when the interest rates were a little bit lower. So it was, it's a hard thing for the consumer to kind of swallow on that, and kind of expecting them to hold off maybe, but we're not really seeing that as much as I was concerned about. So that's a good thing. Also, we got Powell speaking and Evans speaking later on this afternoon, all right? About an hour or so for Powell anyway. All right, let's get over to the overall markets. We've got crude oil back below $60. Yesterday, we kind of peeled down below that $60, heading to those two support areas I've talked about. They acted as big resistance on the way up. They're going to act as support on the way back down if we try to go that way. It looks like we're starting to see that momentum slow as the closer and closer we get to 59 even. The psychological level is 60, but we've got Fibonacci's lining up at 59 and 58. So any of this area below that 60 handle is going to start showing support as the buyers come in and try and support that market. Thing to note here, we have higher highs and higher lows at this point, which is the sign of a bullish trend. That market hasn't broken below. If we break below this 56, then that would break that trend. But anything above that, coming shy of that number, will still have that continuation pattern to the upside, which obviously is not what I really want to see here. All right, we've got gold winding up. Remember, we talked about this yesterday in the daily market commentary when we were drawing this up, and it's continuing to wind up tighter and tighter. Remember, we've talked about this with a rubber band. When you start out with a rubber band, let's just say the rubber band kind of goes like this, and that's kind of what we're seeing up in and around this area to here and here. Now, the more you wind that tighter, right, then we kind of get this little market. And then, it's going to kind of do this, and do this where it really looks like that rubber band is wound up really tight and ready to snap or pop out, kind of like what I've talked about when you get tighter and tighter and you lose that energy kind of with the rubber band and the propeller. You know, this goes out to that propeller that we used to always wind up, right? On that paper airplane, let's say, if we had a paper airplane, you like my paper airplane there? That's not a very good one, but we'll kind of make it look like that. But if we have the paper airplane and we're winding up that rubber band, as soon as you let go of that propeller, the more you've wound it up, the more energy is released. Well, we're seeing something like that with gold here, and we get the market kind of creating this flagging pattern. Now we break out of these areas, it's going to want to snap to the upside, and vice versa. If we break out to the downside, we're going to break a little bit lower. But we're seeing this triangle pattern happening here in gold. Market's looking a little bit bearish here. We'll take a look at GLD because I want to show you GDX and GDXJ, the miners, which is the ETF for gold. They usually move in tandem here, maybe a bit of a lagger on the ETF front, being the GDXJ and the GDX to gold. We're seeing gold start to come off, but we're still seeing these gold miners start to get a bit of a pop. So I'm expecting those guys to follow through, especially if we start seeing gold break down any more on this in this market. But you can see right there that wedge pattern really building up some energy and ready to pop in one direction or the other. We don't know at this point until we break out of that little pennant area. All right, we've got the bonds coming off today. I'm expecting the bonds continue to show some weakness here as the Fed is going to, they're seeing the same data we are. The economy is actually doing all right. Now, if they, knuckle under the pressure from the president and everybody else to lower interest rates because we're worried about this recession here in the United States, we're not seeing any signs of that at this point. So I don't see a mandate to lower interest rates at this point. And I think we're going to see the bonds start to suffer on price as interest rates continue to normalize here. Right now we're pricing in much lower interest rates, but as that pricing comes out, I think we'll see the bonds start to come off. All right, VIX out of the teens right now, out of the teens into the 12 handle, and that's a product of the equities trying to trudge higher here. Now, we've got a pattern here where we talked about several times. It looked like yesterday we were getting a bit of a topping pattern, no confirmation as of right now. As a matter of fact, we printed all-time highs in the Dow. So, yesterday with a setup with this topping pattern there, we've kind of got a doji that looks like this. Now, if we had gotten confirmation of a bar like that, that would look like the market wanted to roll over. We are not getting that right now. As a matter of fact, right now, we've got that same doji where it looks like this, but we're getting this little pattern here, which is a doji with a very small wick, and right now the base is pretty much inside, but if that wick kind of trades a little bit higher and starts looking like that, that's going to look like we have a continuation pattern going on. So we're going to have to watch out for that. Even if we settle down, we go to the red side, it's still going to look a little bit messy on that chart, but it will look more like a topping pattern anyway. At this point in the Dow Jones, it does not. Now, NASDAQ, we're starting to see, we got that doji that looks similar to the other one, but it is a green candle, and most likely due to the fact that we are seeing this happen overnight and stuff like that. But we have that doji there, and a red confirmation is kind of similar to what I was talking about with the pattern where this would start to make it look like it wants to roll over. Now, that's at the end of the day. We are not seeing that at this point. So something to keep an eye on right now, and the E-mini S&Ps looking very similar to that. Now, let's go over to the daily chart of the E-mini S&Ps. We still have that overnight 3,000 printed during the overnight session. We were never able yesterday to print that in the day session. Overnight inventory pretty flat, but no attempt to really rush up and try and print that all-time high there. As a matter of fact, we're just starting to see the weakness come into the markets, and looks to me like we're starting to want to roll over just a little bit here moving forward. Now let's get on to my trades. Earnings trades, believe it or not, I kind of let the time get by. I wanted to throw some strangles around JP Morgan, Goldman Sachs. They would have worked out very well, but I dropped the ball on that and missed that opportunity to get into those. But with XLK, which is the technology ETF, this pattern is the pattern that I was talking about over there with the E-mini S&Ps and some of the other ones, where we have a topping pattern. We've got our doji looking like that, and at this point, and as a matter of fact, as soon as we broke below this area this morning, right below there, is when I started adding this trade. So the market's continuing to slide a little bit as I went on, or as the day goes on here, which is good for me, obviously. But playing this to the downside, I think that the market's starting to get a little bit weaker up here. It's always a struggle for the market, even with good economic data. Once we reach these all-time highs, everybody starts second-guessing themselves. And I think that we're going to see technology as an indication from the ETF. It's going to start struggling here going forward. So with that being said, I went out a little bit further, right? Because I'm looking at really low implied volatility. As we look down here to the implied volatility percent, you can see that that is really low IV percent. All right, so we've got low IV percent. We've got an ETF that gets a lot of traction. There's a lot of eyeballs in there. So low ETF fits my rule there. We got low implied volatility. I have a bearish assumption in this market with low implied volatility. So what do? Well, it leads me towards a debit spread, right? So I'm looking for debits, and I think that the market's going to come down here and test at least this area here, where we're talking about lining up with right around $80 a barrel, so, or $80 for this ETF. That's where I'm thinking we're going to go. So I decided to use my strike location to coincide with that. And I went into the September, bought those 80 puts for $1.73, and I put that in both my IRA and in my margin account. So adding some more there in the IRA, but like I said, I didn't add anything with Goldman Sachs and JP Morgan because I just missed that opportunity. I just sleeping at the wheel, not really thinking about it until the bell went off, and I realized that's what I needed to do. But moving forward, we got a lot of earnings coming up, so it's nice actually to get a couple of these earnings out of the way. It gives you a feel for how the overall earnings season is going to go, and I think that it's starting to look pretty decent to get my feet wet. Like I said, I wish I would have taken advantage of that yesterday, but dropped the ball on that. Everything else kind of working. That ABT is not falling out of bed like I'd like it to. We've been trying to get out of that for a couple of days now, and it's not happening right now. So I'm just going to hold on the sidelines and wait to let this work out a little bit more. And that's about it for today. Check us out on Facebook so you can get access to these videos much quicker and some other content. We got great stuff we're putting out there on Facebook, so please like our page there. And that's all I got for you, other than if you can't take that, take it easy.